Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on interest rates and in particular what the Reserve Bank might do to interest rates next Thursday. Right now, the Reserve Bank is finalising its September quarter monetary policy statement. This is a big document, their view of where the economy is going and what they think about interest rates. Now, most people think right now that the Reserve Bank will cut the official cash rate by 25 basis points to 7.75%. But let's look a little closer at that. It wasn't always that way. Remember back on July 24, the Reserve Bank cut the official cash rate for the first time in 5 years, and it said that the economy was in a bleak condition, and many people thought that the Reserve Bank's quite strong comments about further rate cuts meant that this time around we may even see a 50 basis point cut. Now let's look a little closer at what the Reserve Bank actually said back on July 24. And this is the quote: "Provided that the outlook for inflation continues to improve and there is no excessive exchange rate depreciation, we would expect to lower the official cash rate further." That's quite strong. So the key things there are, provided the outlook for inflation continues to improve. Well, let's look at that. Firstly, the oil price has significantly fallen since July 24. And we're starting to see some easing of inflation pressures out there in the economy, although they're still quite strong. And then they said no excessive exchange rate depreciation. Well, on the face of it, looks like there has been an excessive exchange rate depreciation. If you look at the New Zealand dollar, since July 24 versus the US dollar, it has fallen from 76 US cents to 68 cents US overnight. That's an 11% fall in 6 weeks. Sounds excessive to me, but the Reserve Bank looks at the trade weighted index, so what all our currencies are doing, and particularly weighted for our trade. So that's quite important because it can move quite differently to what's happening to the US dollar. And if you have a look at this chart here for the trade weighted index, yes, it's down from July 24, but not nearly as much as against the US dollar. In fact, it's actually only down 3.4% since July 24. Now that's because the New Zealand dollar has appreciated quite a lot against the Australian dollar in the last couple of weeks. If you have a look at this chart, New Zealand dollar has gone up to 82 or so US cents from 77 cents Aussie before the July 24 rate cut. Now what's happening here? Now this is all about the conditions in Australia. There's a lot of talk about rate cuts in Australia. In fact, yesterday we had their first rate cut since December 2001. So that's helped our currency versus the Australian currency and meant that we haven't had that excessive exchange rate depreciation that the Reserve Bank was worried about. So what does this all mean? Well, we've got a more positive business and consumer confidence, a lower oil price, food prices are still high, but interest rates have dropped for many people, particularly the 2-year fixed rate mortgage, now down under 9%. Inflationary expectations, though, have nudged up a little bit, according to the Reserve Bank's own survey, up to 3% from 2.9%. And the National Bank survey shows inflation expectations running at 3.79%, up also. So the Reserve Bank has to be wary about the inflation issue. It's seeing an economy with the first shoots of recovery coming through, and the currency has fallen a bit, but not too much. What do we think? Well, I think they'll probably stick to a 25 basis point cut next Thursday. I don't think a 50 basis point cut is likely anymore. And the key question now is what will happen on October the 23rd and December the 4th, when the Reserve Bank has 2 more chances to cut interest rates before the end of this year. A lot of people are saying they'll cut another 25 basis points each time, and that we're looking at an official cash rate at 7.25% by Christmas. We'll see. I wonder whether the Reserve Bank will have to cut those rates again in October and December. I'm Bernard Hickey. That was an interest rate special for interest.co.nz.